Having you on. All right. So what do you make of these earnings, Tony? They seems better than expected for the most part by everybody.
Yeah, they were better than expected. I think, folks believed that there would be more supply chain disruption, and Apple basically said that was very limited in the quarter. And as a result, really results were dictated by demand trends and were not as bad as feared. And I think on net, my numbers went up a little bit for the year for revenue. EPS stayed about similar. But it was certainly better than people expected in the quarter. And it was also encouraging that Apple said in the second half of April they had seen some improvement in their demand trends as well.
You didn't raise your price target, though, on the stock. I mean, if I'm just wondering if Apple can pull this off in what is this hellish situation that we're all in, and you don't raise the price target then, even though you take your numbers up, when would you?
Well, our EPS was largely the same for this year and importantly for next year, which is the driver. We adjust our price targets based on two things. One, if our estimates change, and secondly, if the market has changed. And the market's changing a lot every day, up and down, and so we do that periodically. We did that a few weeks ago. The market had bounced off the lows. We raised our price target commensurately. But those are really the two reasons. But to your broader point, look, I think the encouraging thing, if you step back about Apple, is for this fiscal year, we now think that revenue and EPS will be largely flat during what is obviously a major economic shock. And that is encouraging. I think it speaks to the fact that through building services over the last 5 to 7 years, they have created a lot more profit and revenue stability to the company than they would have had a decade ago, and that's encouraging. And then there is this hope that if the economy sort of gets back to normal, starting at the end of this year, that we could have a strong 5G cycle for Apple going forward.
Isn't it all that? I mean, how is this stock, in your estimation, not a must-own name?
Look, I think the investor debate is focused on two things. One is the multiple. It's a good story, but everyone knows it. So Apple historically traded at a discount to the market. It's trading at a 40% premium to the market on fiscal 20 earnings and a 17% premium to the market on fiscal 21 earnings. So even if you believe a strong cycle for next year, you're still paying, relative to history, a dramatically higher relative multiple for the stock. And that's the debate. What do you really pay for this? And I know you've been talking about this on the show for the last 15 minutes or so about broader tech. What is the right multiple, and when do you reach limits on that? I think the second question is, are we back to a normal economic environment next year? Because the iPhone, there's some discretion to when people can upgrade. They can hang on to their phones for longer, or they can choose a lower price model, both of which would impact next year's results. And so there is economic sensitivity clearly in Apple. They're more resilient than they were before, but iPhone were still down 7% this quarter. We thought they were going to be up 13 to start the quarter. And those are the two key factors. What's the price do you pay for this stock? And do we feel confident enough that the economy will be close to normal next year such that we won't have discretionary pullback in iPhone spending?
I mean, even if you have discretionary pullback, if you have any kind of spend, it's likely going to be in names like this, right? If you're still going to have some level of remote working, you're still, I hope not, but, there is a possibility of having remote learning in some respect in the fall if the virus comes back. All of that is beneficial towards a company like Apple. I mean, Tim Cook was talking about iPad and Macs were up more dramatically than maybe many anticipated, including you, as a result of those two, what may be longer-term trends.
Certainly, I think for Mac and for iPad, those longer-term trends are favorable. But especially on the consumer side, the wallet size is only so big, Scott. So if I'm a consumer at home and my wallet is X, and I'm working at home more, so I've upgraded my monitors or bought a new home PC, that could certainly come at the expense of my iPhone and keeping my iPhone a year longer. And this is exactly what we saw in the 2007 to 2010 timeframe. Folks had been replacing their PCs regularly. The PC market was growing. And then the iPhone came out, and folks started spending their discretionary technology or consumer budgets on iPhones, and we saw a decline in PCs going forward. And part of that was a usage and wallet shift. And right now, on a relative basis, working at home with a larger monitor on a PC is probably more important than upgrading your iPhone. And so on one hand, Apple will benefit from some of these trends. On the other, it may somehow come at the expense of itself.
So let me pivot real quick before I let you go. I wasn't intending to have this conversation today, but Elon Musk changed that for us, Tony. Are you on Twitter?
I am not on Twitter because we have to be careful as analysts about what we can publish, but I'm aware of the tweets today. You
are? Okay. So what do you make of them? I mean, from anything from I'm selling almost all physical possessions. I know this is to preface that this wasn't hacked, that this is exactly Musk doing this. I'm selling almost all physical possessions, will own no house, stock price too high, in my opinion, and the stock price gave a heck of a lot back after that. So how do you, as an analyst, respond to this?
Yeah, I mean, look, there still is an open question about whether these were indeed sourced from him, and the company hasn't confirmed it one way or another. But assuming it is, look, there was a lot of frustration on Elon's behalf on the earnings call on Wednesday night about lockdowns. You know, he's obviously been in a battle with the state of California about the ability to operate their manufacturing facility there or not. So, you know, my guess is that part of this is continued frustration at, you know, a different belief he has about how the economy should be opened up in the face of coronavirus. Now, that said, if we kind of step back from the comments, I would say that Elon Musk has been on, quote, better behavior over the last 6 or 12 months. Investors have appreciated that. And so to the degree that this represents Elon Musk deviating from that, which has gotten him in trouble in the past, that is probably what investors are most worried about. That, you know, all of a sudden, you know, he's putting himself in a potentially compromising situation. That happened in the past. Many investors deemed the stock uninvestable because of how predictable some of his actions were. And so when you see tweets like this, I think investors get worried, are we starting that phase again? That isn't great. And you're seeing that reflected in the stock.
Are you asking yourself the same questions that you just suggested that investors may be asking themselves? Is whether this is investable right now?
Look, I think I've always believed that, you know, Elon Musk is uniquely brilliant, and unique brilliance often brings, you know, other trade-offs. Brilliant people aren't the best managers. Brilliant people often are eccentric, and we could argue that that is the case with Elon Musk, and collectively he brings tremendous value to Tesla. But for many shareholders, you know, any potential transgression, you know, making comments on the stock, talking about potential buyouts are just make it too difficult to invest. And I think that is, you know, something that individual and institutional investors have to make their own minds up on. But as far as Elon Musk is concerned, you get the whole package. You get the brilliance, and associated with that, you get, you know, potentially some eccentricities, and that's what we're seeing today.
So this one tweet of the Tesla stock price too high, in my opinion, is that material in your mind, and would that violate the agreement that he had, and could that be problematic?
I don't, you know, Look, I don't know if it's material because he's voicing an opinion, and we've heard, people in the past. I think, Reed Hastings at Netflix has commented on the stock price in the past. Other CEOs have commented, usually favorably, that they think their stock price is inexplicably inexpensive. So it's difficult to, there is some precedent for CEOs commenting on their stock price.
Sure, but not one maybe who's already had some issues regarding, tweeting and the material nature of certain things, right? Absolutely.
And I think that's where the broader question is raised. He does have some some guidelines that he's effectively agreed to, and whether this violates them or not, I don't have a strong opinion on at this point.
You don't? But what happens if he did violate that? Wouldn't you have to have an opinion on that, Tony? Wouldn't it factor into the way it has to have some sort of bearing on how you would think about modeling the company, wouldn't it?
Right. Look, it would to some degree. I guess I don't know if it's there's shades of gray to everything, and we've just discussed the shade of gray in terms of there are precedents for this. Is this truly a violation? And so let's push this, and let's say the SEC came after him and said you violated this agreement. There would likely be a he said, she said phenomena that would take time to play out. And my guess is because he is not commenting on material company information, which was really the focus of what he agreed to, that the likelihood of there being a very severe consequence, i.e. that Elon, would have to change his role, that Tesla would have to pay a enormous fine, I think is low.
Yeah. Tony, I appreciate you coming on. We'll talk to you again soon.